Major bear market for stocks and crypto for the next 5 or 10 years. That is the warning coming from Michael Burry. Remember Michael Burry, the guy who is the star of the film The Big Short, right? The Big Short. That was the movie, right, from Christian Bale, who won the Oscar playing him. He warned about the mortgage crisis, right, the crash in the United States, and he was 100% right. Now he's giving another warning. And I know you guys are saying, yeah, this guy's warned this a number of times. He's very consistent. He says it's going to be about AI. But just yesterday, he gave a timing for how long or when the bear market would, how long it would last, right? It says a number of bad years for US stock market. Not like 2022 bear market, boom, goes up again. Not like COVID, 3 months down, boom, up it goes again. It's not going to be a buy the dip situation. It's not going to be a V-shaped bottom. This is a situation where even the Federal Reserve cannot save the United States. So, and of course, my bet is if that happened, it's not going to be good for Bitcoin either. At least initially, Bitcoin should go down a lot. Later on, when they print money, maybe the Bitcoin and gold and silver take off. But initially, it's going to be pretty bad. So, I think the whole thing's just going to come down. What does it mean by that? By the way, this is the chart he's referring to. This is the chart that kicked off this whole thing. He's talking about this chart. So when he means the whole thing's going to come down, he means like the whole U.S. economy, not just the stock market, not just crypto. He means like U.S. Treasury bond market. That's much larger than housing market, everything. That's much larger than U.S. stock market and much bigger than crypto. So the chart that has tipped him off is this one. And it's very important that we understand what's going on here. The blue line is real estate as percent of the net worth of the average American family. Red line is equities or stocks as a percent of the net worth of the average American family. What do you notice here? Well, for the past 75 years, usually American households are made up more of house value, real estate value. See, the blue line is pretty much always higher, except the seed makes up about 30 to 35%, 1/3 of American households' net worth. But the equities, the red line, is often more like 20% and sometimes below 20%, right? Except lately, now, in the last 10 or 15 years or so, stock market is outweighing the real estate portfolio of most American families. And now, look, he's talking about two very specific periods. He thinks we're going to repeat that. He says, one, see in the 1960s, right? This is around 1967-ish area when stocks started going above the value of real estate, when stocks overtake real estate as the number one household worth, number one household investment in America. And here again is around the year 2000, right? When once again red line gets above the blue line, so stocks are worth more than houses for American families. And now we are in that situation again, and we're accelerating. So he says we're going to get a repeat of what happened in 2000 and what happened in around 1967-68 area. What does he mean by that? What kind of repeat are we talking about? Let me just show you guys. Because people would think, oh, well, doesn't the US stock market just go up and up all the time? Like this is a log chart, by the way. It just keeps on going up and up and up. US stock market always goes up. What is he talking about? Okay. What he's talking about is the period, let's say 1967-ish. Like, yes, you're right in general. Like, this is the crash in 1929, and the markets tend to generally just go up. But what happened in 1967-ish area? Have a look. This is 19, this is what, 66, 65, okay, 67 here. We start off at around right 970 here. That's the Dow Jones. Dow Jones basically measures, more reliable to measure the last 100 or so years, 120 years of U.S. stock market history. 983 here, right? 67 kicks in, 926, and then here 980, and then we crash, right, into 1970. We come back to just over 1,000. We do an even bigger crash. We come back. This is already 10 years later, 1976 now, to 980 again, 1,000, and we crash again down to 740, right? So like a 26% crash. We come up again, right? 1980 now. This is 15 years later, and then we do a mini crash again, right? This was what, 1,000? We go down to 808, 20%. That's a bear market as well. So essentially, look at the 60s and the 70s. We went through how many bear markets? This is 1, 2, 3, 4, 5 of these. Okay, that is what Michael Burry is talking about this period. This is 1966-ish and all the way to 1980, right? See how it bottomed around 1980? Then US stocks took off, and in fact it went to be above the blue line, the net worth of houses. But what happened next, and what's going to happen today? Once again, before I answer those questions, first let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses the exchange that's non-KYC. That means you don't need to show any ID. That means even the exchange can't see who you are. That's why Pablo made this exclusive deal with them, right? So just before, just by depositing $100, do some trading, win $20, right? Deposit $500, do some trading, right? Get $80. Deposit $1,000, do some trading, and get $100 additional bonus. Right, you get the idea, folks. This is a limited time only, folks. This deal finishes on December 23rd, so essentially almost Christmas Eve. And that means basically the IRS can't see you, right? Because you don't need to handing any IDs. That means the IRS can't see you, the tax office can't see you, the FBI, CIA, nobody can see you. Total privacy. So if you're watching on YouTube right now, then the link is in the description below. The link is in the description below. But if you're watching on other platforms, such as this one, that's okay. Just go to my profile page, click on my stand link or link tree, and it should be the first deal that pops up because this is a great deal. Okay, let's get back to the markets, folks. But just remember, this deal is only available on the Pablo He-Man link. Only on the Pablo link. So we're about to have stocks overtake real estate once again. 99, 2000. And what happened to the market was this. You think you know what happened, but it's actually not right. You might think, oh yeah, of course, year 2000 dot-com bubble, right? But actually, that's not, you would only be 1/3 right if you said that. This is the decade of 29, 2000, okay? So, have a look at this. Dow Jones here was what? 99, December 1999. It was 11,500. Boom. We went to 750. NASDAQ went down like 87%. And then you're like, okay, the 2 years later, 2022, dot-com bubble is finished. The dot-com bubble is finished and wasn't a big deal. 2-year bear market, 2.5-year bear market. Okay, market makes a new all-time high. Boom, yeah. 2007, 5 years later, makes a new all-time high. Not that much higher. 13.9, about 20% higher, right? 13.9 on top of 11.4. So yeah, it's 23% higher. Imagine that. Like from 99 to 07, that's 8 years later, you're 20% higher. And then boom, right? Goes down to 7,000. This is 2009 GFC crash. And that forces the Federal Reserve, to start doing QE in modern day times, right? So this is a situation we haven't seen in modern day times. And basically we can see here that this is when the V shapes start happening. Before that, right? So this was what, like 2009 to 99. This is 10 years, right? To get back to where we were, it took 12 years, 2011, right? It took 12 years for the market to get back to where it was. And look at this. Before, markets had these sort of big bottoms, right? Big crashes. Since then, all investors, particularly American investors, got into the habit of buy the dip. They think every time it's going to be a V-shaped bottom like this, because this is the era, from here onwards, is the era of QE, or the Fed dollar printing, right? So from here, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. Oh, this is what? COVID, buy the dip. Like COVID looks scary, but look how small COVID now looks on this entire chart. Bear market, 2022 bear market when Fed hikes rates really quickly. 3 years ago, buy the dip. And now we make a new high, right? And this is the Trump crash, Trump tariffs crash. That looked really scary. Buy the dip. And now here we are. So everyone's gotten used to this. And let's come back to this chart again. So basically, it seems to be a measure of when U.S. stock market is kind of getting too overvalued. See, here we see that in the 60s, when stocks per American household is worth more than the houses, boom, we went into like 15, 20 year, right, chopping bear market. And in 1999, this didn't finish. Once again, this happened. Then, right, as we just saw, markets chopped around for 12 years before it started going higher again. And now we're constantly having the red line above the blue line, constantly having stocks being worth more than U.S. households' net worth. And now it's even accelerating. So the next big downturn where, right, the red line goes deeply down below the blue line is going to be that's why it's going to be pretty bad. And that's why Michael Burry says it's going to take a number of years. It's going to be bad for a number of years. So let's come back to his quote. And he says the whole thing's going to go down. It's going to be number of bad years for U.S. stock market. 5 years, 8 years, whatever it is. I think the whole thing's just going to come down.